right, welcome everybody to the Closing Beat. Happy Thursday. Hope you're having a good day so far. This is the Closing Beat. We talk about the stock market, any stocks, interesting things that may be happening in the markets today, the good, the bad, and the ugly. We'll cover them all. If you have any questions, feel free to ask if you're watching this live. My name is Dustin Tibbetts. I'm a financial advisor with Jazz Wealth Managers. And next year, now that we're SEC registered, officially SEC registered financial advisors, next year I'm going to be doing a lot of speeches at some of the advisory conferences and kind of going as the guy in the shirt and shorts versus the guy in the suits and ties. The guys in the suit and ties are doing studies that show that people just don't care about retirement investing, and unfortunately I'm finding it different. So I'm asking you guys to just hit the subscribe button. If you don't like these videos, that's fine, but help me out. Hit the subscribe button, because when I go to that conference next year, actually, it's 4 of them. When I go to those conferences, my talk is going to be that the young people do care about their investments, and I want to be able to show that there's a lot of people watching and, of course, a lot of people interested. So if you would hit the subscribe button, I greatly appreciate it. Also, if for some reason we cut out a little bit today, there are severe storms going through the area, so if it gets a little scratchy for a second, it should come right back, but man, are we getting pounded with some storms today. Speaking of pounding, look at the markets today. The stock market was down a little bit, but we know we don't really care because the stock market's been up for 4 days in a very nice move. We're going to go over exactly why and show you how we kind of not saw that coming, but how we could kind of understand why the markets were higher, and today why the markets are lower. So if you look around on the screen, you're going to see a couple things. First, over here, you're going to see the Dow. The Dow was lower by 137 on the day. The S&P sold off 12. The NASDAQ closed 21. Everybody in the NASDAQ, by the way, was really excited about Amazon and Apple today. We'll go over that in a second. But the news today, helping push stocks a little bit lower, was that Trump is thinking about the $200 billion, putting tariffs on that. And so really, if you look at this chart right here, this guy off to the side there, you see how in the morning we were down anyways. That red dashed line is showing you where we closed yesterday. We started below that, okay? So we were already lower on the day, and as you work your way all the way down, I'm not going to be able to get my finger there, but by about 2 o'clock in the afternoon, that's when the news came out that just pushed the markets a little bit lower. So it really wasn't like an all-day news event. So, you know, it's what it is. The markets were a little bit lower. Let's talk about why there. If we go over to the charts today, here's the Dow. If you're looking at the charts, by the way, if you're one of our customers, you're not sure what in the world you're looking at, we did 2 classes so far on candlesticks to sort of help you out with that. And we're getting ready to do a 3rd one to wrap it all up, so you know exactly what we're looking at here. Let me know if you didn't get it. Happy to send it to you. But so basically, we've taken a breath in. And so the Dow, you could see just starting to exhale a little bit. The S&P 500 did a little bit better, broke out to new highs for a few days. Everybody was excited. And now it's just time for everyone that bought over the last few days to take their profits. Remember that you guys might be investing for the long term, but there's traders in there as well. And so they're just taking profits in the short term, and that's going to likely continue. So not really a big deal there at all. You'd actually hope that the markets pull back a little bit, so not so bad. Now, we need the banks and we need tech stocks. We cannot have a market rally without the banks and the tech stocks. And so what have we been saying about tech stocks? They have already rallied. So you can see it on this side of the screen here. We called this whole pullback here to then recover and push the markets higher. That's exactly what happened. So now you know there's no real rocket science behind how the markets work. You know exactly. You got to watch it over the last 2 weeks. We walked you through it day by day. But now we said yesterday as well that, hey, we've been up a little bit. Time to take a little bit of a break. And if we do, it's not a big deal, but that will pull the markets lower. So today, that's exactly what happened. The tech stocks pulled back and the banking stocks pulled back, but just a little bit, right? Not even anything to really worry about. So that's going to help hold the markets back. We'll let them take a break, maybe through the rest of the week. I got to tell you, expect some excitement in September. Remember the stats for September, that volatility picks up by 25%, which, considering how low volatility is right now, that's up on your screen over here, 10%. It's at 1348, so starting to creep up. But in the month of September, volatility ups itself by 25%. And September typically is a losing month for the market. 70% of the time, the market actually starts losing, the S&P 500 and the Dow, in the last 2 weeks of September. So expect a lot of volatility. This chart down here is showing a little more volatility. It was sort of quiet in the morning, and then it started going a little crazy. Expect to see, when we post that chart for you, more of this back and forth, all right? You guys got it. You're in the game there. You know what you're looking for. So, man, let's cover a few things here. Oil, price of oil. If we just look at sort of broad indices and the sectors and commodities, oil up another 0.75% today. It was a little bit higher, so it gave back some of its gains, but nice strong move off lows. Remember, it spent a couple months just moving lower. Bad news there. Every Wednesday you get the exciting news. We've talked about it each and every Wednesday for the last 4 weeks. And then if we look at gold, sort of just chopping around. Man, I hope gold doesn't just start chopping around in here. That makes for a really boring product. So hopefully that can wake up and get some things going. Basically, right now you've got a little disconnect. So if you follow up here at the top, we see that we post the U.S. markets, some commodities, bonds, and then some global markets as well. If you've been following along, now you notice that the U.S. is higher over the last few weeks, but the global markets haven't done the same. So there's a bit of a disconnect there. That won't last, right? That'll change. So right now, that's what people are starting to point out. Like, wait a minute, there's a lot of issues going on around the world, and yet the U.S. is plugging along like there's no big deal. They surely are affected by that. So a little bit of that, I think, has to do with today as well. If we look at some of the stock-specific things today, Amazon. Everybody wanted to talk about Amazon because about another another $48 from here, Amazon will become the second company to ever reach $1 trillion in value. So Amazon, the actual number is 2050-27. So today we got to 2025-27. So it did close down here at 2,000. So the big focus is, yay, it got over 2,000. It's really got to get to 2,050 and 27 cents, and then that will become $1 trillion company. Well, the other $1 trillion company, and the first to get you there, was Apple, and it's done nothing but add to its trillions ever since it did break out to the first $1 trillion company. So a lot of focus on that today. A lot of upgrades, a lot of people saying Amazon will not only get to there, but someone even had a $2,500 price target for Amazon, one of the analysts. So we'll see what happens there. Other stocks. So retail earnings is still the focus. We're going to cover a lot of them here, but we'll go quickly. Dollar Tree, that was one of the worst performers today, lost 15%. So here's the thing. You look at a company and how they're doing fundamentally, right? But then you also look at their history and you go, do they have a history of beating expectations? And if you look at Dollar Tree, they've only beat expectations, meaning Wall Street's expectations, once out of the last 4 quarters. So investors are getting a little frustrated with that. You can't miss expectations for that long and expect people to stick with you at your current price. So Dollar Tree, for example, Wall Street expects a company to perform a certain way based on their analysis, their sales, and how you're operating. Well, they post a number. And if you, as the company, report earnings that are not in line or anywhere near what Wall Street thinks, then Wall Street says, we're right, you're wrong. Turns out you're not operating your business effectively. And so that's why stocks head lower when they miss on earnings. So you've got Dollar Tree lower by 15%. Dollar General, I think, got pulled down a little bit too, only about 1%. Not a big deal there, but that's, now you know, it's based on earnings. Abercrombie and Fitch, sticking with the retail space, 17% decline today. Company had a profit of 6 cents a share. Actually, Wall Street was expecting them to lose a penny, so that came in better than expected. The problem is with their Hollister brand. So if you don't know, Abercrombie and Fitch owns Hollister, and in Europe they had a longer summer than expected. Well, actually, it wasn't longer than expected. It was just longer this year, and Hollister ran out of inventory. So if you don't have product to sell a customer that wants to buy a product, what happens to your overall sales? They go down. Wall Street doesn't like to see sales going down. And to give you an example of that, Ulta Salon reporting after hours here today. Speaking of sales going down, the stock closed at $244.41. And if you're familiar with Ulta Salons, you know this store. It's a big store. It's now trading at $228 after hours. So all the way down at these prior lows, missing on earnings, not doing really well there. So they got in a little bit of trouble for not obviously delivering. PVH, this is another retailer, down 10% today. Are you catching the drift? Are you getting a little bit of a feeling for what was weak today? Have we mentioned only retailers up to this point? So PVH, by the way, is the company that has Tommy Hilfiger, Calvin Klein, What's the other one? Sean John. They got some of those names like that. These are the guys that run those brands. And so PVH basically came out with earnings today and didn't do well. Another one that didn't do well today was Michaels. I don't usually look at this one. This is Michaels, the arts and crafts store. I just, I'm not a big fan of this store, so I don't usually track this stock. But when something loses 15%, you happen to notice when something loses 15%. So that stock was lower as well. I don't know how Michaels competes, man. If you know what Michaels is, the store, I just don't get it. It's not something you need to go to the store to get, right? But something that you do need to go to the store to get, or most people do, is Lululemon, or Lululemon, however you say it. They are an overpriced athletic leisure company. The girls that wear the spandex pants and they look like they're always going to work out, but really they're going to Disney World or something. Well, that's these guys. So these guys absolutely crushed it, by the way. If you happen to own Lululemon, then you know what it's doing after hours here. Let's take a look. 147 now, so just killing it. The stock price is now trading at 147. Closed at 137, now it's at 147, all because of earnings. And the real thing that people are focused on here, this just happened, by the way, this is just coming out. The real thing that people are focused on is Lululemon offers clothes that you wear that are supposed to make you look like big and buff and stuff and make you look good, but that they're comfortable. So the real question has been, can a company where look and feel is so important, can they convert those customers to online? And maybe you can answer this. If you're wearing the yoga pants and the thing with the hoodie and everything, and you look like you're going to work out, but you're not, are you comfortable with buying that online? Well, it turns out people are comfortable doing that online because they absolutely crushed it. Lots of their sales online. Earnings were way past expectations. Sales in their stores and online were up 20%. So nowhere near what anybody was expecting. Absolutely killed it. And the company now has a 54% gross profit margin. So when you go spend $100 on those yoga pants, now you can do the math and be like, whoa, y'all are making you guys are making 50% off me essentially as a gross profit margin, not a net profits margin. And what else the company did, by the way, I just have to point this out because I think it's interesting. Lululemon usually is very cautious about how they project going forward. So when you see these companies every day, all day, you sort of remember this stuff in your head, but Lululemon usually reports earnings and then they're like, maybe we'll do okay next quarter. Maybe it'll just be kind of what you guys are expecting. They never say, Wall Street, you guys are expecting us to do this. We're going to do this. They never, ever do that. So in this case, today, Lululemon just reported this minutes ago. They said, you know what, Wall Street? We think we're going to do better than you expected as well. That's incredible. So these guys just going crazy. There's a new CEO here, by the way, and he is obviously getting some credit for this, but got a lot of work to do. You never want to take over a public company when things are going really, really well because, I don't know. It's like buying a stock at highs. It's like, it's going to fall, and then they're going to blame it on you. Speaking of fall, Kronos. We just talked about this one yesterday. This is a pot stock. You guys that like the pot stocks, look how hard it fell today, 30% right off the top. Bottom line, here's what's going on. This is not profit taking. You know how I say sometimes, like with AMD, you go, oh, okay, well, look, this stock had a great run. You expect to see some profit taking, but it's very controlled, right? It's a reasonable profit taking because nobody buys a stock like AMD, sees it take off, and then just dumps all their shares. Most people will just get rid of like 5 or 6% of their shares, maybe 10% or something, and then they sit back and they wait to see what else it can do. But there's a big difference between that and what happened on Kronos today. So first of all, this is a pot stock. I'm going to try to be nice about this. So the company has sales of $7 million a year, at least for this year, or the last 12 months. $7 million in sales. I know for a fact that there are 2 people at this very moment watching this show live that have companies that do more than $7 million a year in sales. Let me ask you, if your company does $7 million or more in sales, or you can think about this as if you don't have a company, just pretend, is your company valued at $2 billion as of yesterday, right? Hell no, right? Think about that. If you have a company that does $7 million in sales, do you get to put a valuation of $2 billion on it? Absolutely not. Kronos, believe it or not, does $7 million in sales. They don't make a profit, by the way. They don't have any way to pay you back if this stock starts falling down, just so you guys know. They have $7 million in sales, make no profit, and their company, as of yesterday, was worth $2 billion because of people that go out and buy this stock. That is ridiculous. I'll go over here real quick. That Tilray company, same thing. They lose money. They have we did the whole profit margin thing yesterday, or the whole valuation thing yesterday, but today we're focusing on Kronos because it fell 30%. What happened? There is a very popular short selling company. It's called Citron. And when they speak, people listen because these guys do their research. So the company's name is Citron. And if you don't know what short sellers are, they're companies that do research and they look for stocks that are overvalued and are about to fall. And they bet on that fall. And so they absolutely banked it today if they happen to own these shares. What they do is they bet on the price going down. They actually did a study, came out with the results to it today, and they just killed them. They killed them in this quote. I'm going to find the actual quote. They said that Kronos is all talk, and they're not telling the truth on the size of their distribution agreements, meaning they're lying to you, the investor. That's what they claim. And they said that specifically, quote, they are deceiving investors. They're not worth it. So they're telling you that this company is not worth it. You could do a quick little bit of research and see they only make a little bit of money. They only have a little bit of sales, and they don't make any profit. So guys, be careful. We talked about this yesterday. Be careful with these things. These companies don't make money. I know it's exciting, Bitcoin and pot stocks and whatever the other stuff you are interested in, but they don't make money. The only way you make a sizable profit in the long run is if someone bigger and better comes along and says, we don't care if Kronos or Tilray makes money, we want them. And they buy them for some ridiculous amount. That's it. Other than that, I hope you're fast. I hope you're not trading on Robinhood. I hope you're buying and selling like that. So just a heads up. All right, back to retail. You had Signet. It wasn't all bad news in retail, by the way. Signet today up 24%. They sell jewelry that's overpriced and obviously doing really, really well with that. And then Guess. We talked about this yesterday, but Guess, didn't even know that was still around, but they're apparently doing well. And that stock was up 6% on the day. All right, a couple other names. We'll wrap it up. General Motors was down 2% today. These poor guys. They're trying to work on electric vehicles. They go to China. They say, hey, guys, will you make us some batteries and we'll put them in our new electric vehicles? China says, sure, we'll make these batteries. China then gives them the batteries, and General Motors is like, what the crap is this? These don't work. It doesn't pass our safety test. It doesn't pass our standard test. And so now all that time and money has been wasted. They can't use those batteries in the cars. So poor General Motors, man. You want to see them do well, but they just can't catch a break. Salesforce.com, we covered this yesterday. It was earnings after the close. And so Salesforce.com was basically a non-event earnings-wise. Here's a quick breakdown of this. So the company reports earnings basically all normal, nothing interesting about it. And then they said, hey, Wall Street, we want you to expect that our profit is going to be a little bit lower next quarter. And normally that's a big deal. But they said, our profit's going to be a little bit lower. Now wait, before you sell our stock, it's because we're going to invest in some marketing. We're going to promote our brand a little bit more. And Wall Street's like, okay, we won't slam you. We're just going to take a little bit off your price. So the stock price today was a little bit lower because, of course, there's a bet. I mean, maybe the marketing doesn't work, but Salesforce has a strong history of doing well with that. So Wall Street said, all right, we're going to just, cut back a little bit on the price. So not really a big deal for Salesforce.com. Oh, what was the other one? AOBC, American Outdoor Brands. These are the guys that make Smith & Wesson guns. They used to be called Smith & Wesson. They changed the name to try to seem a little more American, so it didn't seem so violent. And you have, they were down 3.5% today after hours. I believe they're up like 15%. 1170, big win for them on earnings. They're doing really well. And the company is also cutting costs. So they've been really, really trying to cut costs without reducing the quality. And apparently they've been successful at that. They commented that they were doing well with that. And so, hey, good for them. You're going to make guns, at least make them well, I guess. So that's the end of that one. Apple, by the way, they've got an event coming out 2 weeks from now. They're probably going to announce the new iPhones. If you guys are diehard fans, you want the new iPhone. Supposedly one of them is supposed to be like the size of like, you know, a pineapple. So check that one out. What else? If you like the idea of tying your capital gains to inflation, that's being proposed by Trump in the White House. That we're going to hear more about that one. Campbell's Soup, remember yesterday or 2 days ago or whatever it was, we said Campbell's Soup announced that they would be announcing that they're not going to sell their entire business, and that was sort of a trick to the guys that are trying to mess with them. Well, today Campbell's Soup did exactly that. They announced that they will only sell a part of its businesses, and that's not the end of that story, by the way. If you have a Bank of America IRA, first of all, if you have a Bank of America IRA, keep us in mind at Jazz Wealth. Maybe we'll transfer it for you. We'll help you with the investments and keep you posted on them and kind of take over. But Bank of America goes, you know what? We had a restriction. We weren't letting our customers trade in their IRA accounts because it's best for them. And so now we've decided that what's actually best for them is to let them trade in their own IRAs. Gee, thanks, Bank of America. Oh, but we're going to have to charge you a commission. So you can buy and sell now all you want, which is good for you, but go ahead and pay us a commission to do it. So absolutely ridiculous how they worded it. It wasn't just a couple years, not even a couple years ago. This was recently. They said customers can't buy and sell in their IRAs. We're going to charge them differently because they shouldn't be racking up commissions. Apparently they've changed their mind, so heads up for that one. That's called like promotion at its finest. Make it seem like that we're doing right by you, but in reality, they need the money. They're hoping you trade a little bit more. Jobless claims, small uptick in jobless claims, but nobody cares because they're at historic lows. And EA Sports, by the way, in the video game category, I don't know if you had a chance to take a look at this, but EA Sports is Electronic Arts is what they're called. They've delayed one of their games that people were waiting for. The stock's down 10%. So did that hit some of the other ones? A little bit. Yeah, a little downtick on some of the other ones, but EA it's really all their problem, not anybody else's. Okay, that's all I have for you. I think we've covered more than we probably should have today. So now we've covered what happened in the stock market, retail, we covered that. Facebook, you like the idea of Facebook? Did they come back a little bit today? No, just a little bit. That's called chop, Henry. That's called chop. So for the last couple weeks, you're just talking about chop in that stock there. Nothing impressive, no trend, no easy way to buy or sell that stock. You had a client that was a shell with a $3 billion valuation. Citron does good work. Their work in China and fraud space was good. Jeffrey, I would agree. When Citron speaks, if you're not already short the stock, you might want to listen to what they do. They don't mess around. I think there was a documentary done a while back where they documented some of their analysts and how they would go around and find this information. Really cool. So we were wrong to bet on Kronos to grow from the legalization of Michael, there's no wrong way to invest unless you lose money. What I'm talking about when I mention these stocks is a long-term investment. You do not invest in something like that unless you are super, super confident that a $7 million in sales company is worth $2 billion. Just ask yourself, where else can I find that? Can I go down to my local jeweler or whatever? Can I say that they have that kind of valuation, that multiple? It's ridiculous. So there's no way I would ever suggest it for a long-term investment. And there's also no rush, by the way, because people tell me, well, yeah, they don't make any money now. They're losing money now, but they will make money in the future. You can make that bet. There's nothing wrong with that. It may lose, it may win. There's no problem. However, you also won't miss out if you wait for them to start making money, then jump in. So you may end up buying it at $40 and taking the ride from 40 to 100 rather than playing that volatility between 10 and like 20 while they figure it all out. So people feel like they're going to miss out, and that causes them to jump into stuff. But in reality, think of something like Amazon, Facebook. The one that I'll have to do a video on this story. There's a company called Jazz Pharmaceuticals. So that was one of mine. Had I stuck with that, oh my God, I wouldn't be here right now. Tell you that much, making my $1.50 off YouTube. The idea is you wait for someone to become profitable. Yeah, you're not going to catch that first little bit, but then you ride from there. Look at the big stocks. So that's kind of where I'm at on that. Square is pulling new highs when Square back in the news today, by the way, as well. Continuing to move higher there, but we have different comments now. So the stock's moving slowly and steadily higher. You guys all know this. If you watch this regularly, you all know what's happening right here. So we used Visa yesterday as an example. A slow and steady uptrend can continue for indefinite periods of time, really. But if you look at something like Square, that was a slow and steady uptrend that all of a sudden, what's happening? It's like Bitcoin, it's like any of these other stocks, right? They're trending higher, doing really good. Everybody's happy with them. And then all of a sudden the news starts talking about them and they rocket ship straight up. We call it either going parabolic or climactic, however you want to look at it. It's all of a sudden this tear away from the normal slow uptrend that they had. And, you know, I'm not going to tell you what to do, but you can go look at any stock that does that and see what happens next. Kronos would be a recent example, but of course that was a little bit of news involved there as well. Anyway, I don't know, Henry. It may be $2 off YouTube now. Maybe $2 lately. But hey, that's all I have for you today. Again, next year I'm going to be doing these speeches at these advisory conferences with all the stuffed shirts and suit and ties. And they all say that you guys are not interested in investing for retirement and you don't care. Every study says that. I want to be able to show them, look, there are so many people going to this channel to see about their retirement, learn stuff and everything. So if you would hit the subscribe button, really appreciate it. I want us to prove them wrong. And by the way, all of those speeches I hope are going to be live. So I'm hoping I could take the whole get up with me, set it up, and I'm going to do a whole thing on the statistics about people that actually do care about their retirement and how we need to change that study. We need to quit saying that people don't care and start showing people how to care about their retirement, and we'll see. I'm looking forward to it. So we'll see what happens. But anyways, hit the subscribe button if you would. Enjoy the rest of your day or evening, and we will talk to you again tomorrow for the closing beat, and as well as the Doe Show first thing tomorrow. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.